Hello guys, we'll be looking at amortization of prepayment or prepaid expenses. In this amortization of prepayment or prepaid expenses, you'll be looking at how do you expense prepayment monthly. How do you post monthly prepaid expenses. In the previous class, we've already done how to post the lump sum when the money is being paid at first. Take for instance, 12 million naira. If we paid Augustine and Company Limited the sum of 12 million naira for annual rent. Now, we've done that in the previous class. You can check out the class on prepayment or prepaid expenses. The two entries that I said we will make is to debit our prepaid expenses account and credit bank account. And this accounting entry is known as capitalization. That is, you capitalize asset. But in this particular topic, which is amortization of prepayment or prepaid expenses, we'll be dealing specifically with how to expense this particular entry month by month. So look at this point now. I have done the calculation. All what you need to do is this: the annual rent is from January to December, which is 12 months. Now, how do you determine the monthly rent? To determine the monthly rent, you just need to divide the lump sum, which is 12 million, by 12, because it is 12 months, so you will get 1 million naira. Same thing goes to the HMO. This is the lump sum. The lump sum is 5.5 million. Just divide 5.5 million by 12, you get 458,333.33. You can see. So now we are now going to post this particular entry month by month. That is what we want to do. That is amortization of prepayment. So let's go there. So the first thing you need to do when you are posting in this particular case, it's a bit technical, but you just need to follow me, and so that you'll be able to get it. We are still going to make use of the same payments. You understand? So go to your task, click on payment. No. Task. Now we used payments in the previous class to make the initial entry, but in this particular case, because we want to do amortization, we are going to use the receipt icon. Please don't get me wrong. When you are making first payments or lump sum payment of payments, you use payment. But when you are doing the amortization, you use receipt. So go to your task, click on receipt. Now, when you click on receipt, you are going to change this customer ID to vendor ID. Please, in receipt, because receipt, what you first see in receipt is customer ID. Change it to vendor ID. When you change it to vendor ID, this is what will appear. You understand? All these places will close out. You'll be left with all these white places. This is the only place you can work in. You can use to work. You enlarge this. Now, since this thing is already in vendor, click on this mirror, something that looks like mirror like this. Click on them. Now, Augustine. You can see it now. So this is Augustine and Co. Now we want to amortize our monthly rents. Now, issue of monthly rents by 31st or 30th of every month, you need to ensure that you expense your monthly rent. So, and I've told you here, what we'll be amortizing every month is 1 million naira for the next 12 months. After 12 months, you discover that this amount in this 12 million will wind down to zero after 12 months. So let's continue. That monthly amortization, rent expense for what? For January. Rent expense for January 2026. Now, change it from account payable to prepaid expense. Change it from account payable to prepaid expense. What this means is that this place is, you are when you anything you choose here, you are debiting here. you are debiting anything you choose here. Since we choose account payable here, what it means is that what it means here, anything you choose here, you are crediting any item you choose here. So now I told you initially that when you are doing amortization, you credit prepaid expense. So we are crediting prepaid expense here. Now here you will now choose the expenses. So because anything you choose here means that you are debiting it. So you now choose that particular expenses that you want to debit. So what we want to debit here is the rent expense. Rent. Let's go to expense. So this is rent. You pick rent. It's a number here. So amortization is always done by end of every month. Don't mind the dates. We are actually using this for educational purpose. It's not supposed to be that yet, but please take it that way. Uh, this is not this is not a real class. It's a kind of a it's an educational class meant to teach you what you are supposed to be doing in the real sense of the business world. So it's supposed to your end. It has to be end of the month, please. Mostly, it's always done end of the month. After you've done this and you've checked that everything is right, okay, the amount you've linked it to this amount. This is very, very important. These two linkage is very important between the GL account. This is the GL account, your prepaid expense account. What it means that we are crediting this account and we are debiting this account. So 1 million naira. So when you have checked and everything is fine, save. So the next thing you need to do is to go to the next one. Now the next one is to amortize HMO. And the HMO is 458 333 naira. You go back to your Sage. Follow the same process I told you about. The same process I told you about is task, your receipt. Now, next thing I want you to do in the receipt, I told you the first thing you need to do is to change the vendor ID, customer ID to vendor ID. So we are going to pick HMO. We are going to pick HMO. HMO for January 2026. Now, what are you going to choose here? I said you will choose prepaid expenses, and it's 458 333.33. Put any reference number here. Now, here is no longer going to be it's no longer going to be rent or lease expense. You will choose something like medical or something health benefits. Let's check. Do we have anything of such? If we don't have, we need to go and create. Do we have anything like health? If we don't have, I think we will need to change one of these to, let's change this bad debt or this employee benefit program. We can change it to medical expense. So 60, 50. And create new. Let's go to new. Medical. Sixty. Medical now. It's an expense already. So just save. Can see the direct way I quickly created. So you can see it has changed to medical. So we link this account to medical. You can see what it means here is that this one has been credited, why this one here has been what debited. If you have checked and everything is fine, just save. Yes. So if you have done this particular to amortize the entry, so let's go to report and check. First, let's check the account payable journals or ledgers. So I want to see these two, Augustine and BNHM alone. To see them. So what did you observe here? The first month in January, we amortize, we've removed this, the money in the account has reduced to 11 million. You can see also the same thing with this one. The money, it will be winding down until you get to zero. You can see this is by the second month now, another 1 million will come up to reduce to 10 million. That is how we are going to do, or that's how we'll be doing until this 60 million is totally what? Zero. Now let's go back to our reports and check the balance. You can see the same thing you will find in trial balance. The same value you found in that prepayment is the same thing you find in trial balance. You can see 16.041, the same value exactly. This is prepaid expenses. It should be going down. The more you amortize, the more this value continues to go down.